Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks are set for a fresh record high. As investors await today's key US inflation data, Fed Chair Jerome Powell reiterates interest rates will likely be higher for longer. A Bloomberg scoop, China is considering buying millions of unsold homes as it looks to shore up its debt-ridden property market. Plus, the European earnings story continues with the focus on some of the region's biggest banks and financial services companies, including Allianz. Lines crossing there. It's a beat when it comes to operating profits for this insurance company, of course, with the asset manager PIMCO within the mix as well. Allianz's first quarter operating profit coming in with a beat above the estimates, 3.99 billion euros, essentially 4 billion euros in the first quarter for Allianz. The estimates had been for 3.86 billion. The total revenues for the quarter coming in just shy of 50 billion euros, 48.4 billion. That's the redhead across the terminal right now. A beat when it comes to first quarter operating profit for Allianz, close to 4 billion euros in the first quarter. The estimates had been for 3.86 billion. They are affirming their full year forecast. I'm going to be speaking to the CFO of Allianz later this hour. That interview at 6:30 UK time. The stock up 15% year to date. Commerzbank now, of course, a major German lender coming out with its earnings as well. Also a beat in terms of the first quarter. Net income beating estimates at Commerzbank. Net interest income, this is key, we know, for investors, coming in above the estimates. 2.13 billion euros in net interest income for Commerzbank. The estimates had been for just above 2 billion euros. Net income for Commerzbank coming in above the estimates, and comfortably so. 747 million euros in net income in the first quarter. The estimates had been for 656 million. In terms of revenues, also a beat there. 2.75 billion in terms of revenues for the first quarter for Commerzbank, above the estimates of 2.74 billion. In terms of the outlook for net interest income, they see about 8.1 billion euros for the full year in net interest income. The estimates had been for 8 billion. So revising up, or at least coming slightly above the estimates in terms of their expectations for net interest income for the full year for Commerzbank. Again, a beat from this German lender. I will be speaking to the CFO of Commerzbank, Bettina, along with the Markets Today team. That's just after 7 a.m. UK time. Staying on the bank space, this time the Netherlands, ABN Amro as well, with their results coming through. And in terms of the first quarter for ABN Amro, another beat. Three sets of beats coming through from the financial services sector this morning. ABN Amro coming through with a beat as well in the first quarter. In terms of its profit then in Q1, 674 million euros, well above the estimates of 526 million. So first quarter profit, a solid beat coming through for ABN Amro. In terms of operating income, also comfortably above the estimates, 2.2 billion euros. The estimates had been for just over 2.1 billion. Net interest income, again, a focal point for the analyst community and investors in the Q1. Net interest income for ABN Amro coming in with a beat as well, above the estimates, just shy of 1.6 billion euros in NII. The estimates had been for 1.56 billion. So a beat there and a relatively comfortable one for ABN Amro. I'll be speaking to the CFO of that lender later this hour. That interview, 6:45 UK time. ThyssenKrupp is another company we're looking at. Earnings coming through from that company as well. A very different picture when it comes to this industrial giant facing up to the challenge around energy and input costs. Cutting their outlook again. They see a net loss this year. ThyssenKrupp cutting their outlook again, seeing a net loss. They lower their full year sales and net targets. They're keeping their adjusted earnings goal. In the second quarter, sales came in below the estimates. Adjusted earnings came in slightly above the estimates in the second quarter. But again, the key line coming through from ThyssenKrupp is lowering their outlook once again and forecasting a net loss for the year. We know that energy has been a challenge and the cost of steel for this industrial giant. Now, let's check in on the broader markets because the picture remains relatively positive. Producer prices in the US yesterday, a bit of a mixed picture on that front. The headline number higher than all the estimates, but you lift the lid and it looks a little bit more benign. We lead up, of course, to the key inflation print CPI out of the US later today. That expected to edge lower. European stocks currently looking at gains of 0.2% after a fresh records were notched yesterday in the session. The FTSE 100 looking to add 0.4%. S&P futures flat right now, but above that 5,200 level. Nasdaq futures, after a rally in some of the tech names yesterday, including Tesla and the semiconductor space, 18,410 on the Nasdaq, currently flat. Flip the board and look cross-asset then. We're going to keep an eye, of course, on the reaction around the Treasury curve on the back of that CPI data out later today in the US. The positioning, of course, 482 currently on the 2-year, the 10-year, well, also sensitive in light of that CPI print. 108 on the single currency, $82 a barrel on Brent, moving up 0.6% in the session. And copper, fresh records, and that is a commodity to watch, certainly in the session, up 0.3%. Let's cross over to Asia, check in with Paul Dobson, our executive editor for Asia Markets. Lots of news then today. The bottom line seems to be stocks at a 2-year high, grinding higher. Paul, give us your take on the Asian market moves and what you've been seeing in the session so far today.
Yeah, pretty fascinating day's trading so far, Tom. Lots and lots of inputs, as you said, going on here. We had the rally in the US markets overnight, tech in the driving seat, and that's really the key thing that has been pushing Asia's markets higher today. We're led by TSMC, another big gain for the Taiwanese chip maker there. We had earnings from Tencent and Alibaba overnight. Tencent good, Alibaba not so good. But the Hong Kong market is shut, so we won't learn the full impact of those until tomorrow's trading. And likewise, that muddies the picture a little bit when we're trying to discern exactly what the impact of the sanctions that were announced by the US yesterday will be for Asia's markets. We have seen some of that showing up, for example, on SMIC, one of the Chinese manufacturing companies, but not huge moves there. And the sentiment seems to be that while these large headline numbers, the actual impact in terms of Chinese exports is going to be pretty small. Then, mid-morning, we had this news, as you mentioned at the top of the show, on the property. The idea that local governments could buy back more of the unsold inventory, adding some support into the property companies as we headed into the lunchtime break, giving Chinese markets a lift. They had been just a little bit lower sort of through the morning session, weighing a little bit on the overall Asia complex. But that was showing signs of coming back as we headed into the afternoon session as well. Everything else looking positive. As you said, 2-year high, feeding into that global gauge where we're at a record as well.
Paul Dobson, Bloomberg's executive editor for Asia Markets, on some of the key factors driving that region this morning. Paul, thank you very much indeed. We look ahead, of course, to the inflation data out of the US. Federal Reserve Chair, meanwhile, Jerome Powell, speaking in Europe, saying the central bank must wait for evidence that inflation is continuing to cool before cutting rates. His comments coming ahead of that CPI data, of course, due later today.
I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
OK, let's bring in Bloomberg's MLI strategist, Mark Cranfield. Mark, how significant, then, do you expect this CPI report to be, particularly when it comes to the question of the Fed forecast, the dot plots?
Yeah, it's very significant because the three rate cuts which are in the dot plots at the moment are really hanging by a thread. And it may be too late anyway. They're quite likely have to be changed in June. But if there's any chance of preserving 3 rate cuts, it would mean a soft CPI report today. So if we don't get that, then pretty much traders will give up on the idea, which they've probably already decided that 1 or 2 cuts is the most they're going to see this year. And we're likely to get some sort of confirmation for that. We may even be back to just 1 rate cut if the CPI number comes in hot again. Don't forget, the past 2 inflation reports from the US, both of them have exceeded expectations to an extent. There's driven bond yields higher and driven the dollar much higher as well, in quite a big impact, in sense that neither market has recovered since then. So we're still, yields may have come down a fraction this week, but they're still much higher than they were after the last 2 CPI prints, and the dollar is still near the high of the range for this year as well. So you can see how significant it is. Of course, the equity market would like a benign number. They would like it to come out pretty close to expectations. They can carry on focusing on the AI story and the tech story and the general earnings situations, which has been pretty decent as well. So it's really bonds and currencies who are looking at it most closely, especially things like dollar yen, which it was the very last CPI report was the final thing that helped to trigger it towards the 160 level, which has been the high for this year. So currencies, very much yen, Aussie especially, and to some extent the Chinese currency, all eyes on the CPI this week.
OK, Bloomberg analyst Mark Cranfield on the FX sensitivity to that inflation data out of the US later today. Thank you. Now, US Secretary of State Antony Blinken has reassured Ukraine of Washington's support as Russia continues a large-scale offensive in Kharkiv. Blinken met with Ukrainian President Volodymyr Zelensky in Kyiv.
I have come to Ukraine with a message. You are not alone. The United States has been by your side from day one. We are with you today, and we will stay by your side until Ukraine's security, its sovereignty, its ability to choose its own path is guaranteed.
Let's get more on this story with Bloomberg's Piotr Skolimowski. Piotr, how significant then is this visit by Blinken, and why is it happening now?
Indeed, it's the first visit by the senior U.S. official since the U.S. Congress actually approved the $61 billion military aid package for Ukraine. Obviously, that package came very late. It took 6 months for the Congress to actually approve it, and that left Ukraine with outgunned and outmanned on the battlefield. And that obviously happened as and Russia actually sensed that opportunity, and they opened a new front on Friday. They are attacking towards Kharkiv, which is in the northeast of the country. They're also pounding the country with bombs, and which obviously destroyed a lot of infrastructure. And what happened at the meeting is that Zelensky was pleading with Blinken for U.S. to deliver U.S.-made Patriot batteries, which would obviously provide Ukraine with air cover. What we are hearing is that U.S. is now considering sending another Patriot battery. What Zelensky said, they want 2 batteries for Kharkiv alone, obviously, because that second largest city in Ukraine has been really suffering. And obviously, there's more aid coming from Europe, also considering sending another Patriot battery. So at this point, the visit itself was obviously important in the sense of trying to show that the U.S. is there, that it's going to be there for the long haul. But Ukraine is definitely on the back foot because of the delays, and it's now crucial for that aid to come to the front and to be delivered to the front line so that actually Ukraine can fight back.
OK, Bloomberg's Piotr Skolimowski, thank you very much indeed on Blinken's visit, of course, to Ukraine. Coming up, we're going to go live to Doha for day 2 of the Qatar Economic Forum. We're going to have plenty of big interviews, of course, to bring you today, including the CEO of hospitality company Accor. That conversation is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It is day 2 of the Qatar Economic Forum, powered by Bloomberg. Horizon's Middle East and Africa anchor, Germana Bertecci, is there with a guest. Germana.
Tom. Well, tourism is a big theme, and I'm actually going to be hosting a panel later on with some of the tourism ministers from Saudi Arabia and Qatar. But hand in hand with that goes the hospitality sector. So I'm really happy to say that the CEO of Accor, Sebastian Bazin, joins me right now. Really exciting time. And again, lots of conversations happening here about what the region can do to attract tourists. And of course, hand in hand with that is the hospitality sector, as I was just saying. Talk to me about some of the plans that you have for the region.
Big. This is the best region for us on Earth. It is where we're growing the fastest. We have 300 hotels here, another 150 coming. Most of it coming from Saudi Arabia and the UAE, but it is being the country in which we've been having the greatest growth post-pandemic. It's actually 25% better numbers today than 2019, which is not the case outside the Middle East. So this is a place to bet, this is a place to be, this is a place to act. And you're probably going to have to do it different ways between Qatar, UAE and Saudi Arabia.
That's interesting. That's something I wanted to pick on, actually. How are the trends and customer preferences different in this part of the world versus other parts of the world?
Yeah, it's if you go to Saudi, you want to discover something, I guess, you've never been to Saudi in many cases before, and it's a lot of heritage and a lot of wonderful sites. Alula is one of them. If you go to Qatar, they've done something extraordinary 20 years ago, which is really due to university, education, health, hospital, and culture, museum, great museums within Qatar. If you go to UAE, to Dubai, well, you probably have different fun. You go to food and beverage, you go to a lot of actually entertainment. So the best is to do the three. You go for 10 days and you go 3 days, 3 days, 3 days. But it's different actors. They have one thing in common: vision, ambition, backbone, and leadership. So
in the past, you've talked about Accor and your positioning in the luxury part of the market.
Yeah.
And I also wonder whether that also aids you in this part of the world as well, because it is a region that tends to be drawn to luxury commercial properties.
Yeah, it was a game changer for Accor. We were nowhere in luxury lifestyle 20 years ago. We now are number 2 behind Marriott. Thank God we did, because most of the growth here in this region is luxury and lifestyle. Economy, mid-scale hotel, they have quite a few, but that was built 25 years ago, and there's no further growth. So when it comes to SLS, Faina, Delano, Rixos, Fairmont, here you are, the Fairmont and Raffles. This is what a lot of customers want when they come here to the region, is just to enjoy the best time ever, and they could afford it. So no, this is a segment to play, is a luxury segment.
Well, you and I had a conversation at peak COVID, I would say January 2021. It was obviously a very different time. And we spoke then about the outlook for business travel, because back then, people were resorting back to Zooms again. Can I just ask you, where are we now in terms of the numbers versus pre-COVID? Are we fully back to where we were? Are we above where we were?
We're better.
Business travel?
It depends a lot on geography. If you go to Asia, we're probably still 20% lower than 2019. Southeast Asia better, North Asia much less. If you go to America, we at par. We're back to 2019. If you go to Europe, we're probably 3% better. If you go to South America, 5% lesser. If you go to this region, 25% better than 2019, which is why the fastest recovery has been in the UAE. Most of it has to do with demand and travelers coming to Dubai and enjoy the sun and many other things. Has to do also with financial resources. A lot of investment are being made from the UAE, from Saudi, from Qatar to basically host those people. So this is where the financial means are.
Yeah. What about business travel? Is it back?
Business travel is back 95%. Different mix. Before it was international customers, international corporate affairs flying from Seattle to Paris. They no longer fly, or less, because they're going to go on Teams and on Zoom. Much more small, medium-sized enterprises, because there's so many people working remotely. You want those people to be back, and you have some small groups meetings in many hotels every month, a group of 10 or 20, because they don't meet again. So this is
actually created an opportunity.
And we have staycation.
Yeah.
People leave their home on Thursday, back on Monday, and they work remotely on Monday, Friday from a hotel.
Well, something a little closer to home. The Olympics are coming up this year. How has the action activity been around the Olympics, and what are you seeing in terms of a pickup in bookings?
Well, so far we have to finish all the works, because there's a lot of works being done in Paris. It's going to be finished on time. It's going to be extraordinary, better than what everybody think of. It's the scenery, Paris, the city, and we're actually anxious to host probably 15 million people. So we have to take care of security, which I have nothing to do with. For the rest, hosting people, Accor alone, we're going to be managing the athlete village, the media village. So we're going to be hosting 25,000 people and 17,000 beds. So we'd better be good at it in terms of welcoming and shaking and kitchen and housekeeping. So that's my job. And for the rest, you're going to see a lot of sports. My biggest really dream is Paralympics. I think the Paralympics, anybody who's been watching us, who's been to any games, Paralympics, it is actually far stronger than the Olympic itself in terms of emotions. That's the end of August.
Yeah, no, for sure. Really exciting time in France. Can I just ask you, given that you were talking about positioning mid-scale versus luxury, how is that panning out as far as the Olympics is concerned?
We are today 85% booked in all the hotels in Paris. Accor alone, we actually have 700 hotels in the 10 destinations in France. So we are in between 78 and 85%. And we're going to be 100% probably by the time of the Olympics. The good news, and I probably should not be saying it, prices of hotel room did not go through the roof. So the pricing in a hotel room will be fairly similar when you go to Le Bourget Air Show. Yeah,
well, you strike me as a glass half full person. And going back to that conversation in 2021, you said to me, don't ever
I was on my knees at the time. I was suffocating.
But even that, you were saying to me, don't underestimate the hospitality sector. So
it's blessed.
I'm going to ask you, though, What could go wrong? What is your biggest concern for this year?
Geopolitics.
Yeah.
Anything which is a conflict zone, it's mess. It's a mess, and it's dangerous. But I'm stunned because I guess end of November I was really thinking that Egypt will have basically very few tourism coming to Sharm el-Sheikh and so forth for December. He was actually packed, and that was a couple hundred kilometers from Gaza. So it's. I need to be very humble about it. I need to navigate through troubled waters, but people want to travel, people want to meet people, and the best thing against war is for people to interact and to discover somebody else's culture. So let's travel, let's understand each other, and let's listen and be humble.
Okay, that's a nice way to leave it.
Thank you.
Sebastian Bazin, the CEO of Accor. Tom, I'll throw it back to you.
All right, Germana, great interview. Thank you very much indeed. Bloomberg Horizon's Middle East and Africa anchor, Germana Basechi there, with the CEO of Accor at the Qatar Economic Forum in Doha. There's plenty more big interviews, by the way, from QEF today, throughout the day, including conversations with the CEO of French energy giant Total and the group CEO of Qatar Airways. Stay with us. This is Bloomberg.
I don't think you can differentiate AI from geopolitics anymore. They are so deeply intertwined because AI is now an important part of weapon systems, of healthcare research, of car technology, EV technology. So they just go together. So it's a new thing. Now, microchips is also an important part of the geopolitics. It wasn't to the same extent before. So all these things are just much more complicated than they have been.
You're tantalized, right, by this exciting change when many people are actually really worried about what's coming.
Well, I think the world has never been more exciting, right? What's happening in AI is leading to some tremendous change, leading to some huge progress. For instance, in the way we do research and R&D in the pharma industry, it's improving the weather forecast. It's improving a lot of things, right? There's just a tremendous increase in compute power. So generally, it's a positive thing.
And you can see the full interview on Leaders with Accor Goes Green, airing 9:30 p.m. New York time tonight in the US and 6:30 p.m. London time on Thursday. Some other stories making the news this Wednesday. OpenAI's chief scientist, Ilya Sutskever, is leaving the company, saying he plans to work on an undisclosed project. He's one of several board members who moved last November to fire CEO Sam Altman. In a post on X, Sutskever says OpenAI's trajectory has been, in his words, nothing short of miraculous. In a separate post, Altman describes Sutskever as one of the greatest minds of our generation. Coming up, Allianz reports better than expected first quarter operating profit and inflows as well into the PIMCO part of that business. I'm going to be speaking to the company's CFO in the next couple of minutes. That is coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Global stocks are set for a fresh record high as investors await today's key US inflation data. Fed Chair Jerome Powell reiterates interest rates will likely be higher for longer. A Bloomberg scoop, China is considering buying millions of unsold homes as it looks to shore up its debt-ridden property market. Plus, European earnings in focus. Allianz reports a rise in profit with PIMCO clients adding 32 billion euros. Meanwhile, Germany's Commerzbank upgrades its outlook for lending income this year after recording its best quarterly profit in more than a decade. Let's check in on these markets then very briefly as we look at fresh records across global stocks. European futures pointing to gains of 0.2%. FTSE 100 looking to add 33 points, up 0.4%. S&P futures currently looking to modest gains of about 0.1%. Nasdaq futures currently flat after the upside that came through for some of the big tech names yesterday. Let's flip the board and look cross-asset then. A big day in terms of the inflation data, CPI. That is the data point of the day of the week. The US 2-year at 481, euro dollar at 108, Brent closing in on $83 a barrel, up 0.7% so far in the session. Copper at 10,171, reaching record highs in terms of that industrial metal, up 0.6%. Let's get to the earnings story around Allianz then. It was a beat in terms of this insurance company, reporting operating profit for the first quarter that beat average estimates. The German insurance giant also affirmed its full year forecast. I'm joined now from Munich by the CFO of Allianz, Claire-Marie Coste-Lepoutre. Claire-Marie, thank you very much indeed for joining us on the back of these earnings. Talk us through what they tell us about the business in the quarters ahead. You are reaffirming your guidance for the full year. You haven't changed that despite these better than expected results. Is there an upside potential to that forecast?
So thank you very much for welcoming me today, Tom. So indeed, Allianz had a very good start into 2024. Allianz had a very good start into 2024. We have our operating profit up, our net income up, and sorry, I need to change something technically here. It's not working. I just need 30 seconds.
OK, let's see if we can get that technical fix. This happens sometimes. Live TV, we sometimes have technical issues. Just talking through what's been happening for Allianz then as we await for that technical issue to be addressed. It was a beat in terms of the business top line, in terms of the first quarter. Really interesting as well. We'll be asking Claire-Marie about this if we establish that line. Hopefully we will, around PIMCO, because the inflows have come through for PIMCO. 34 billion euros for this business. Of course, the asset manager with a focus on fixed income. They'd seen a number of quarters of outflows when it comes to the PIMCO part of the business, but that narrative has changed. So the interesting question will be to what extent that is going to be sustained. They have also seen a lower claims as well in terms of property casualty insurance. Claire-Marie, I believe we have fixed this technical issue, so we'll bring you back in at this point. And I started with the question around the forecast, the full year forecast. You come through with this beat. The forecast has been maintained for the full year. And I just wonder, the question will be from some investors out there, is that looking less than ambitious right now, given that the first quarter has come through strong? Are you expected to beat that full year upgrade, do you think, that full year forecast?
So thanks a lot, Tom. Yeah, indeed, it's fixed now. We had a super good start into 2024. Our operating profit, our net income are up, as you were mentioning, and also our shareholder core net income, which is a very good indicator of our earnings power, if you want, is up 16% in the first quarter. What is really good about our results is that our three segments are contributing very well, and this balance is also a very good indicator for the year going forward. So with all my key KPIs in terms of growth, in terms of profitability being ahead of my expectation, I can indeed very well confirm my operating profit outlook. So you are right, there are really good signs into our numbers, but that's still very early. We are in the insurance business, so I think at this point in time, our outlook is the right one at 14.8 billion midpoint, but I'm indeed very confident as we are going to move ahead into the year. And then you were mentioning
with the top range,
PIMCO,
with a top range of
yeah, exactly.
Yeah, no, I was just going to say a top range of 15.8 billion.
I would say.
Yeah, in terms of on PIMCO,
I think like what we are confirming.
Let me just on PIMCO, we did see those inflows. I know you were going to go there. 32 billion. That's positive, clearly, given the outflow story of the past. Are you seeing inflows in the current quarter as well? Do you expect that momentum in PIMCO to be sustained?
So PIMCO had a very nice first quarter. Obviously, 32 billion of net inflows, really exceptionally high performance fees as well. Operating profit up 10% for the quarter, which is extremely nice. Clearly, this is a volatile environment in terms of yields, but there is a lot of space for fixed income active asset managers. PIMCO is one of the best in the world, very clearly, and we continue to see very good momentum in terms of net inflows at PIMCO in April and mid-May as we speak.
Okay, I want to talk a bit about the US market. You have recently sold some US insurance businesses. Where is Allianz on this journey? Is there more to come on that front?
So, first of all, in the US, Allianz is a very big player in the US. We are committed to the US market. You can see that through PIMCO, through Allianz Life, that is a very big player on the life side. And when it comes to our large corporate and specialty play, we are also well positioned and we are very committed to the US market. So we have decided to do this divestment on the mid-core business in the US where we were quite small, and that was more to ensure that we can focus and deliver where we are really good at on the large corporate and specialty business when it comes to P&C. I think what you should read in this small M&A operation that is really small when you look at the size of the Allianz Group is much more the fact that we are extremely diligent at managing our overall portfolio and looking at what makes sense in terms of capital deployment. So I think that's definitely the logic of this divestment as well.
What is your comfort level? What is your expectation, Claire-Marie, about the ability for Allianz to return more cash to shareholders in the quarters ahead?
So you may remember last time when we had our year-end results, we announced a 1 billion share buyback. This 1 billion share buyback is ongoing as we speak. We have done the first tranche. We are going to do the second tranche right now. So I think it's a bit too early to discuss about new share buyback right now. What is really intrinsic in the approach of Allianz is that we are very rigorous at managing our capital. So we will not leave anything on the table when it comes to creating value for our shareholders.
OK, Claire-Marie Coste-Lepoutre, the CFO of Allianz, on the back of that earnings beat. And thank you for sticking with us through those technical issues. We appreciate it. Coming up, German defence contractor Renk says it has seen strong revenue growth in the first quarter. We're going to discuss that and its defence spending push with the company's CEO. So a spotlight on the defence industry. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday. Now, German defence contractor Renk has reported strong revenue growth for the first quarter and confirmed guidance. For more, let's cross over to Bloomberg's Oliver Crook, who's standing by in Berlin with a really interesting interview. Ollie.
Yeah, that's right, Tom. Well, listen, Europe is scrambling, as we know, to build out its long-neglected military capabilities. And as a consequence, we've seen valuations go absolutely through the roof. But defense is a historically low-volume industry. And despite surging demand, scaling up production calls not only for massive investment, but also building out a whole ecosystem. And at the very center of the combat tank ecosystem, you will find Germany's Renk, which builds engines, suspensions, transmissions for the tanks that are used across the world's militaries, whether it's a Leopard tank in Germany, the Challenger in the UK, Leclerc in France, Bradley in the United States. They've got their earnings out this morning, and we're very pleased to be joined by the CEO, Susanne Wiegand, in Bavaria this morning. Susanne, thank you so much for joining us this morning. I just wanted to begin on the numbers in the first quarter, what you saw in the first quarter broadly, and what does it tell you about what we can anticipate for the rest of this year?
Thank you very much for taking the interview, Oliver. We had a very good first quarter this year, so we're very happy with respect to the performance we could deliver. We achieved a top-line growth of more than 20%, 23%. We could improve our EBIT margin by 2%. Our net working capital ratio went down, so all in the right direction. We had positive operating cash flow and also free cash flow, despite some one-time effects for refinancing in the course of IPO. So generally, super happy with the performance of Q1 also in comparison to the segment.
And I want to take it a little bit further out. So for the kind of years to come, obviously this is a massive story, the military buildup across Europe and the world. What is your growth expectation for the years to come?
So with respect to the guidance we have given to our investors, which we have confirmed also here in Q1, we expect top-line growth annually by about 10%. There will be years where we can achieve more, but relevant is really not just the market, which is in strong demand, and we expect also that this continues in the next years to come, but also the ability to deliver this. And this is what we have shown in Q1, that we really could translate order backlog into revenue. And I think this is what counts at the end of the day.
Yeah, and that's what I want to talk a little bit about is order backlog and now making that a reality, right? Scaling what is a historically low volume industry. What are the biggest hurdles right now for you to scaling? There's obviously questions of finance, materials, headcount, all these sorts of things. What are the biggest challenges right now to getting those numbers up?
I think for Renk, we are in the good position that we have with respect to our assets, a very well invested asset base. And we do not see a need at the moment in the demand and backlog which we have to have extensive capex or expenditure capex to be done. So our challenge is really to find the qualified people in the speed and the scale we need them to ramp up. We are on a good track there. And the second, let's say, challenge is obviously supply chain. Supply chain is becoming better and better for us at the moment. We had quite some work to do in the last 18 months with respect to supply chain, but we could see also in Q1 that things are going into the right direction. This is also the reason why we have taken some inventory on the books, which was a prudent decision last year, and it's coming down and leveling out.
And so the question on the supply chain, so two questions there. One, are you also competing with automakers, for example, for some of these parts? And is that something that is going to have to be maybe helped out by the governments? And also, are you concerned now what we're seeing with more tariffs rising between the United States and China? Could that hit the supply chain in terms of material costs?
Yeah, good point. Thank you. Yes, we are competing also with the automotive industry. And the defense industry ever since was not, let's say, the most important customer for all our suppliers because of the volume, the low volumes in comparison to the automotive industry producing in large scale series. However, with the visibility and the order backlog we have for many years, we could improve our position to negotiate. And you hit the point. Also, the government could help more. And if we, let's say, have to increase volume, which we all expect, then this is one of the important measures to become more a priority with the suppliers. Absolutely.
And a question on the sort of governments. Are they putting their money where their mouth is? Is the rhetoric, are the orders really matching the rhetoric that we're hearing out of Brussels and all the other capitals?
I think the governments have all understood, not just the German, but across Europe, that defense budgets need to be increased. I don't perceive that there's a debate about whether 2% or even more in certain countries. It's just a debate how to finance that. And this is obviously not so easy with respect to parties, upcoming elections and the like. But I'm very convinced and confident that the money will be allocated and put, and then obviously also cash flow and money spending and orders will come. But there is a delay in understanding the situation and taking decisions and executing really and putting orders into industry, which we have seen in the last months and honestly in the last 2 years after full-scale war in Ukraine. But things will sort out. I'm very confident.
And how much of that money do you think needs to come also from the private sector, from investment, and trying to encourage more money to flood into this industry where there's been, frankly, a large taboo for many years? The EIB has tweaked its rules a little bit, but maybe not gone as far as many in the defense industry would have liked. What is the role of the private sector, and how hard is it to raise money in Germany specifically for this?
You're hitting all the points. Also here, good news. It's getting better and better. Also, the German investors have redefined their ESG criteria with respect to the defense industry. It's important that the defense industry is treated like any other industry in let's say the global capital flows and markets. We have not perceived let's say in the US and also in the UK and even in the Nordic states any restrictions anymore. Germany is also on the way, and since let's say specifically in Germany, defense companies are privately owned. It's really important that the capital market side is treating our industry similar to any other industry, and is not putting barriers both for equity capital as well as for debt financing. So the industry in total needs that to scale up and ramp up.
And another way where your industry may be also like these sort of more consumer industries is the sort of transition to electricity to a certain degree, where I was learning about how much now electric motors are being used in tanks and in submarine propulsion. Can you talk to us a little bit about the innovations and what's coming for Renk and what you're focusing on?
Yeah, absolutely. It's exciting to see that we even see in this very conservative traditional industry obviously new technology, which is a good point. We see clearly electrification and hybridization, and most of the specifications we get from customers for future projects, there is a requirement for more electrical power, for hybrid solutions, even on, let's say, vehicles and tanks with higher tonnage. We also see lots of AI coming in for autonomous solutions, for remote control solution, and we obviously see a huge demand to be able to act joint and combined with other equipment like drones. So sensors and connectivity and interaction with other systems to combine, for example, information or pictures is also of utmost importance. For us in Renk, this means clearly that we more and more electrify our systems and connect the interfaces into the connectivity for the mobility solution of those tanks.
Well, Susanne Wiegand, thank you so much for your time today, the CEO and chairman of Renk, joining us from Augsburg in Germany. And Tom, I'll hand it back to you. I also found it very interesting that sort of, as we have these EV transition on the road, that also there's functions for this on the battlefield. So, for example, tanks, which obviously are very loud as they move through the battlefield, there's also these electric motors for that last mile in order to be more silent as they approach kind of enemy defenses.
Really, really fascinating conversation, particularly the competition as well with the auto industry that Bloomberg's been reporting on, particularly around talent and parts of the supply chain. Ollie Crook in Berlin with that interview. Thank you. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. ABN Amro has reported better than expected first quarter profit. Very pleased to say I'm joined by the company's CFO now, Ferdinand Vaadrager from Amsterdam, on the results coming through for the Dutch lender. Ferdinand, good morning. Thanks for joining us. Talk to us about net interest income. It was a beat in the quarter. Talk us through the outlook, though, for net interest income for the bank. Does it still remain flat in 2024 versus 2023, or do you see an uptick?
Yeah, thanks, Tom, also for having me. Taking one step back, and then I address NII as well. Overall profits were very strong at 674 million, which is up 30% compared to last year. ROE close to 12%. And if you look at total income at 2.2 billion, that was also higher. And as you say, evidenced by a resilient net interest income, both on the lending as well as the liability side supporting, but also strong fee growth, which is important to us, where all three client units contributed to an overall increase of 4% compared to the last quarter. As I said, net interest income is resilient. We provided guidance at Q4 of around 6.3 billion for the full year, and we are very confident with that guidance.
Talk us through the progress towards the 2026 targets then, Ferdinand, and how these results set you up. So you're targeting 9 to 10% ROE by 2026, return on equity, and you're targeting, 60% cost to income. What progress have you made towards those targets? How much confidence do you have in meeting those 2026 targets?
Yeah, Tom, we're confident with the targets we provided, specifically cost income. Overall, it's always comparing cost a bit difficult quarter on quarter due to regulatory levies, which have a more seasonal character. But underlying our costs were down compared to the previous quarter. And also there, we do expect some inflation with new CLA coming up for the second half of the year. And we're also still investing and upscaling our FTEs in some of the major change programs. But strict cost control is a very important element in reaching the 60% cost income in 2026. And also there, a fee income of 3 to 5%. And also the backdrop we're seeing of resilient NII. I must say this quarter is evidencing that we are confident with the overall targets we provided.
Talk to us briefly about acquisitions, because ABN Amro has long been considered and speculated around a potential acquisition target. Cross-border mergers, cross-border acquisitions, is that a possibility, do you think?
Yeah, Tom, let's see. What we've seen so far is mainly in-market consolidation. We've always said we are looking at potential bolt-on acquisitions if they boost our execution of our strategy. That was evidenced by the acquisition of Bax, one of the larger neo-brokers in Europe. But overall, I mean, what the trigger will be, I think there might come some more support for a European banking unit or capital markets, but there's still some fundamental topics like a European deposit guarantee scheme potentially being a trigger for a more cross-border M&A.
OK. Ferdinand Vaadrager, the CFO of ABN Amro, on the back of those results. A beat coming through from the most recent quarter for that Dutch lender. Markets Today is up next. This is Bloomberg.